Hey everybody, Brent Morris here. I want to talk to you today about a couple essential to order types that you need to know if you're going to trade, and that is market orders and limit orders, pros and cons of both, and what they do. And these impact both buying decisions and selling decisions, and even other orders like stop orders. The whole market limit debate, so to speak, or choice is something that you need to consider there. Now, before I get too far into this though, let me just mention a few important things. One, the thinkorswim web, which is what we're going to be using today. Thinkorswim web, it's for educational purposes only here today. I'm just going to be showing you individual stocks and trades, and they're not recommendations, they're just examples. And remember, there's no guarantee that execution of a stop order will be at or near the stop price. All investing involves risk, including loss of principal, and past performance is no guarantee of future results. Now let's do this. Let's head on over to thinkorswim web. If you want to bring up a stock, you may already know this. You put a symbol at the top of the page. I'll just put T for AT&T as our example stock here. And if I want to buy it, I can click on buy. And it brings up my order down here. Well, notice it defaults to a limit. Now I can change that. We're going to be focusing on market and limit today for the most part. Here's limit. It puts in a price, and if I'm doing a buy order with a limit, it's saying that's the most I'm willing to buy it for. Whatever this price is, the most I'm willing to buy it for. Now I can move that price down, but there's a consequence to that. It's probably less likely to get filled. The lower I put that buy limit price down, the less likely it is to get filled. The higher I make it, the more likely it is to get filled. But remember, if you're looking at a limit order, you're prioritizing the execution price. You're saying, I'm not willing to change the price. I'm not willing to buy it for more than a particular price. But it may not fill. And so what some people do is they change it to a market order. If you do a market order, notice the price disappeared there. And because it's saying fill it at the market price as soon as possible. Market orders prioritize the speed of execution, but we're not guaranteeing that price anymore. So can you see how sometimes you may want to focus on one or the other? If a stock is more volatile, you're more concerned about not getting in at a particular price, that you won't be able to get in at the price that you want, then use that limit order. Often after hours when the market's not open, people will put in limit orders. But if it's something where you have a more liquid stock, you just want to get in as soon as possible, maybe you consider that market order and you can just put in the order that way. So that's the buy order decision with market or limit orders. Now, if you want, the same decision occurs on, say, a stop order. Let me just pull up let's pull up a stock here, Bank of New York Mellon, just another as an example. And let's say we're going to sell this. I already have 100 shares in this paper money account of Bank of New York Mellon. If I want to sell it, hey, I click on sell. Look, I'm confronted with the same decision, limit order or market order. If I want to say, I want to sell this, but I want to sell it for at least $117, that's what it's showing right now, then I can do this limit order. Is anybody guaranteed to buy it from me for $117? No. So there's no guarantee of execution, but we can guarantee it'd be that price or more if it does fill. But if I just want to get out of this quickly, then I'm going to prioritize the speed of execution. I'm going to change it to a market order, and we'll just change it to a market order and get out. Now, one other little note I should make, market orders need to be day orders. If you have a limit order, you can make that a day order or a good till canceled order there. But the point is, if you have a limit order, you have the price you can put in. Once you put in that market order, that is going to be something where it needs to be a day order because it's going to fill right away. If you happen to put this in after the market closes for the day and you put in a market order, then we'd expect it to fill right away as soon as the market opens the next morning. In other words, the next trading morning there is when it would likely fill. Now, you may be thinking, there's another type of trade that's very common, Brent, and that is often I'll buy a stock. Let's say we bought a stock. Here's an example stock, and we decide we're going to make it a stop order. Notice there's a couple different types of stop orders. There's one that just says stop. Now, when you just see stop, think stop market. If I put in stop, it's going to say, we're going to put in that stop order and we're going to put it in at some price below. Let's say $112. We put in the stop. This is just an example here. What that is saying is if the stock goes down to $112 or less, anywhere less, it's going to activate. And then it will turn to a market order. Why? Because remember, I said, when you see stop, think stop market. Once it's activated, it turns to a market order. That means, does that mean we're going to get out right at 112? No, it's a market order. We have no guarantee of the price execution there. And that's a very typical type order. There's one other type of order I want to talk about here, and that is a stop limit. Notice when you do that stop limit, what it's going to do is it's going to give you two prices. There's the activation price, which we said was, I think in this example, we were going to use $112. But there's also another price, and that's the limit price, because it's a stop limit. It's a stop market, not a stop market. And let's say we put in $110 on that price. What that says is once the stock goes to $112 or less, it's going to activate the order, but it's not going to fill unless it's at $110 or more. Pros and cons to that. Well, yes, absolutely. We know we're guaranteed we're not going to fill for less than $110. But do you see the con on that? It may never fill. What if the stock gaps down to $105? You're still holding on to your stock there at that point because it doesn't meet the parameters of that limit price on there. And those stop orders, those stop limit orders are typically done, not always, but typically done as good till canceled orders there. So I'm hoping that is helpful, everybody. When you talk about different order types, and there's more order types in this, but it all starts with these foundational order types, market orders and limit orders. You got to know one from the other because that affects your buy orders, your sell orders, and even your stop orders there. So, hey, thanks for joining me today as we explored these order types using thinkorswim web.